My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. And here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. Earlier this year, separate to the formation of a double top Adam and Adam type, I pointed out another newer pattern that was going on. I said at the time, and I quote, "Whilst all of this was happening, another new pattern seems to be emerging. The March-based falling wedge pattern. This is still an early pattern, and falling wedge patterns, as you may note from my commentary on a similar pattern in Chicago wheat, are not the best of patterns to show direction. The data suggests that just under 70% of the time they have a bullish breakout. However, their tendency to have false breaks is quite high. Additionally, I cannot give a measure of target X until the breakout occurs, which hasn't happened as yet. So we're all a little in the dark here." End of quote. 2 weeks ago, the market, after some struggles, saw a confirmed break higher, thus giving a preliminary target X2 on the upside for the falling wedge pattern in the 614 area, and a fuller target X3 on the upside in the 635 area. Last week saw the market reach higher through the medium moving average, currently 606, and the short medium moving average, currently 613, reach target X2, but stall at the congestion around the 50% Fibonacci line of the 2014-2019 move at 618. This week prices have powered higher through the 50% Fibonacci line, forming a small acute bull channel, currently 627 to 660, and powering through target X3. The latest spurt came yesterday when prices made a bullish long white Mariposa and closed over the previous two highs of the early 2021 double top. They had also managed to power out of the bull channel as well. In the process of the last 2 months, the market has created a very large V bottom. So let's now look at what may happen next. Well, the target for the V bottom has already been achieved. However, a simple doubling up of the recent bull channel indicates a topside resistance in the 695 area. Not a target, but a resistance. That is really interesting, as the next two significant resistances are the big 50% Fibonacci line of the 2011-2019 move at 691, and then the 50% absolute Fibonacci line at 697. And mind you to think that the 50% absolute Fibonacci line is a very interesting level. Meanwhile, elsewhere, I've also drawn a bullish Andrews pitchfork for the December 2020 to late March 2021 action. And we have the middle tine below, currently at 647, and the upper tine above, currently 715. This is a preliminary pitchfork and may need some finessing, but we'll see. Minneapolis wheat. There are, or at least were, a number of differences here in this contract compared to the Chicago and the Kansas City contracts. The first was the delay in heading lower compared to the other two back in late March. Next, as is despite breaches on both the upper tine, currently at 714, and the lower tine, currently 628, of the August to December 2020 bullish Andrews pitchfork. This pitchfork was until yesterday running the market's bullish angle of attack. Indeed, I wrote the following 11 weeks ago and repeated each time since. I quote, "Now, over all of this, one must remember a very keen and important thing. We're still within the bullish Andrews pitchfork. Nothing's changed there. Until otherwise, the bullish Andrews pitchfork is the main deciding factor." 3 weeks ago, prices dropped down to the lower tine and its close companions since December last year, the rising medium moving average, currently at 625. During that week and the start of the following week, the market penetrated the lower tine but failed to effect a true break, rising back up with some consolidation actions until yesterday we had a breach and a close up over the upper tine. Right now this may seem to have similarities to the breach below the lower time, but I think in reality it may not. The two key features are: 1. The breach below saw contradictory patterns throughout its time, something I highlighted when we were down there. 2. And perhaps more importantly, we are currently on for a possible monthly key reversal up here, something that is not seen in any of the other grains I've examined, both in the US and in Europe. This is also something that I highlighted 2 weeks ago when it started to occur. If we close on the 30th of April, that is the end of next week, above 643, which seems likely, then we'd be on. Hence, I am of the mind that this rise may well have seen off this bullish pitchfork that has served so well. I could be wrong, but we'll know by next week. That is why I've drawn a fresh bullish Andrews pitchfork for the December 2020 to early April 2021 move. The middle time is the nearest, just below the current market, currently at 706 even, and rising more acutely. We have further overhead bands of resistance, you can see where they are, but the one notable one is the August 2017 high at 753. The only fly in the ointment is this. If we look at the whole December 2020 to date action, then it looks very much like a bullish measured move higher. And if this is so, then we have just about reached the apex of this move. That is something to ponder. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Service International Limited. And here comes the final bit.